Perspective with Lawrence Tabane. Mondays to Thursdays, 9 to midnight.
Last hour of our Power Perspective, 7 minutes now past 11. That's our time. Let's have now Nnamdi Oranye, Business Development Manager, the consultancy that supports leading telecoms operators and financial institutions across Africa and the Middle East. Nnamdi is on the line to talk to us. Good evening to you, Nnamdi, and welcome to Power Perspective.
Good evening, Lawrence. Thanks for having me on the show, and good evening to the PowerFM listeners.
Thank you so much. I'm not going to pretend as if I know how this mobile money transfer works. Does one still need a bank account to be able to do transactions on this? Just give us a background of how it works.
Yeah, that's a valid question and one that I get quite often with consumers.
Yeah.
But the premise around mobile banking or mobile money is the ability to make financial transactions a bit more manageable and cost-effective for the unbanked population. The challenge historically has been that traditional banking, your bricks and mortar, has been generally quite expensive for the unbanked.
Mm-hmm.
And the logic behind mobile money is that most of the unbanked generally have a mobile phone,
mm-hmm.
and you essentially bring in the banking or the financial services industry to the unbanked using the mobile phone.
Mm.
So in theory, you can use your mobile phone to make a transfer of money to pay your bills. And more recently, actually, we've had cases, example in Zimbabwe, where you're able to generate savings and bear interest in some of these accounts. So it's quite a novel and interesting market at the moment, but one that's still relatively new to most consumers.
Mm. But before you can do those transactions of the transferring money, where is that money kept? Who keeps the money? I mean, you must have money somewhere. This is where I'm getting. Is it with a financial institution or with a mobile operator?
Yes. So they did.
We lost him. Nnamdi Oranye will try and get a hold of him, business development manager. He believes that the company believes that there's enormous difference. This can bring enormous difference to Africa's unbanked population. There's a huge success story in Kenya. He's going to be touching on that. I think we got him back. Nandi, are you there? Can you hear me now?
Yes, I am. Yes, I am, Lawrence. Sorry about that.
I think it's a problem with your mobile phone there.
No, that's all right. I think that's why I'm in the industry, to try and fix these bugs.
Okay. Yeah, talk to me like a 6-year-old. I mean, where is this money kept? Before you can transact, there must be money. You cannot just transact without having money somewhere.
Absolutely. And that's the core of mobile money. So there are generally two parties involved. One being the financial institutions, which is the banks,
mm-hmm.
and in more instances than not, you have the telco operators involved because you clearly have to use the mobile phones. So the money actually resides in the banks.
Mm.
So for any transaction occurring in the virtual world via mobile phone, an equivalent amount needs to be held in a bank account. So whilst it's a virtual transfer, the concept is quite similar to your internet banking or your electronic banking, where there's behind the technology or behind the electronic transfer, there's some physical cash in the bank account. So that is essential and crucial to the success of mobile money.
Okay. We're going to take a break, and we'll be back talking to Nnamdi Oranye, Business Development Manager, when we return.
Naturena. This is your world. Power 98.7 on 103.6 FM. Now, we're talking. You're listening to Lawrence Tabane on Power 98.7. Now, we're talking.
Lines are open on 0861-987-000. That is the number to call in the studio if you have a question. 0861-987-000. SMS line 44622. It will cost you R1.50. On the line, Nnamdi Oranye, Business Development Manager. We're talking mobile banking. What kind of market uses this kind of banking system? The LSM, Nnamdi?
Generally, yes. So mobile. As a bit of background, the M-Pesa story in Kenya has been, I guess, the golden child across the world, across the globe for mobile money or mobile banking or mobile financial services. And we're finding that more often than not, there's the sub-Saharan Africa is becoming a big test bed for mobile money transactions. And when you think about it, generally the environment is suitable for it, given there isn't a significant financial services infrastructure in place in most of these countries. So it's a ripe market for it. So most of the unbanked, those not in the formal banking sector, would generally have a mobile phone, and that just makes it perfect for that LSM group to benefit from mobile money. Yeah.
It's a big story in Kenya, but why did it fail in surrounding areas and countries like Tanzania?
Yeah, that's a question I get asked a lot, and I think the simple answer to that is there isn't a one-size-fits-all. I come across lots of mobile money deployments across sub-Saharan Africa, and one of the common themes across all of them is that, what works in one country generally doesn't work in the other. So there's a very strong case for lots of market research prior to implementation. And if you go into the M-Pesa story, it actually took them 3 years. 3 years plus before they actually got it right. And that's the same type of commitment that most mobile money operators need to consider as part of their rollout strategy. Mobile money isn't a cheap exercise. You're sort of talking from a technology perspective. We're talking in the millions of dollars to implement it, both in technology, in resources, and time. And it sort of behooves most of the operators to spend a bit of time in terms of market research. And market research isn't just sort of your desktop research. It physically means conducting some proof of concepts, speaking with people on the ground, getting them to use the technology. And what you start to pick out of that is the key drivers for why people want to use the technology. So you're absolutely right. The first time sort of mobile money came to South Africa, it wasn't as successful as most people thought it would. But most of the big players are relaunching. And some are doing quite well. And if I'm to sort of name a couple, the FNB e-wallet is one of the probably better success stories in South Africa. And I think that the reason for that is they've sort of taken a step back and done some decent market research. And their approach is to target the banked as opposed to the unbanked. And then you get the banks to then almost have that secondary education effect to the unbanked. So, you're looking to the bank to looking to pay their domestic workers or house helps. And they literally, in theory, almost force them to use the e-wallet solution. And that starts to give the unbanked the exposure to mobile money, e-wallets. And with time, I suspect what FNB would do then is start to provide those services to the unbanked, because now they're quite comfortable. So I guess in direct response to your question, why it hasn't worked in certain countries is that, generally I find that most of these mobile money operators haven't necessarily done the market research and due diligence before sort of jumping into it.
Don't you think the country like South Africa, where we have a very established banking system that is almost accessible every corner with ATMs to a lot of people, it will be very difficult to catch up in a country like ours?
I think that on the surface, that's probably the what it seems like. But there's about 13 million in the populace out there that's unbanked. So somehow you've got to still pull them into the banking institution. And most governments these days have a financial inclusion mandate. So somehow we need to service that populace. I think in comparison to most African countries, South Africa is has a well-established financial services infrastructure. But what we need to start thinking of is how to leverage off that technology to bring in the 13 million to the fold. It's still going to be a cost exercise to try and extend that banking infrastructure. So we've got to think outside the box on how we can try and bring people into that fold. So it's whilst we have a decent infrastructure here, we still have a bit of way to go. So I actually generally think mobile money is that gap, is that sort of that technology gap that would fulfill that. And if you start to consider options of even making mobile money free, because in comparison to traditional bricks and mortar, mobile money is relatively inexpensive or a cheaper option. We can start to drive that financial inclusion mandate more aggressively.
Yeah. What are the charges there for these kind of transactions when we talk about the charges that the banks or are these the operators that charge the subscribers or the banks? Who takes the money?
Yeah, the various models in the market. You might have a telco-led model, so that's where the telco operators are driving the mobile money transaction. You might have a bank-led model where they're driving the transactions. But generally, the transaction model varies from country to country. But what I found, it generally falls into three categories. One, there's a fixed price amount. So regardless of the amount you're sending, whether you're sending $100 or 100 rands, there's a fixed amount. It might be, say, 10 rands for every 100 rands you send. There's a variable or percentage or tiered model where based on the amount you send, they charge you a certain percentage. And generally, I find that is, the more you send, the cheaper it is. And then there's a hybrid in between, which is, there might be a certain component of a fixed amount, and then above and beyond that, there's a variable component or percentage-based component above and beyond that. But it generally varies from country to country. But when you compare it to your traditional banking system or banking avenues, the transaction fees are much cheaper. That's guaranteed. However, in comparison to the target market you're looking at, which is the unbanked, who generally have less cash in hand than most, the transaction fees are still a huge chunk. So the thought process we have in Atlantic now is how do we start to facilitate making those transactions nil or free for the unbanked while still maintaining the profitability mandate by the operators or the telcos. And one of the concepts we're starting to think about to help drive that is what we're calling the freemium model. So I think the best way to explain the freemium model, you sort of think that Google, it's free to use Google in your searches, but behind that there's sort of Google AdWords that third parties pay for. So if you're searching for, say, a restaurant, and in a restaurant in Johannesburg and Sandton as an example, then you have restaurants popping up in that area, and people behind that pay for that AdWord campaign. So that same concept, which is a freemium concept, can in theory be applied to the mobile money world, where the consumers can transact freely, but behind that there might be some third-party value-added services that people can then pay to participate in that transaction. I personally haven't seen it in the past 18 months across sub-Saharan Africa. I've seen one variation of that, but I personally think it's a fantastic driver to get adoption, people using the product without having to sacrifice a significant chunk of their income.
But the freemium concept is not only paid through adverts. Also, when the subscriber gets basic transaction service for free, when she starts using it frequently or wants to conduct business through it, then a payment structure kicks in.
Absolutely. You've hit the nail on the head. The various variations of that freemium concept, and you've actually named one of those models, and that's based on the frequency of transactions. Now, clearly, there's a trust factor that's built in sort of using the service. And the ones that are quite comfortable with that, people are finding are quite happy to pay, or pay a premium, which that's where sort of the freemium word comes from, pay premium to use that service. And the challenge with adoption most of the time is the trust factor. So the question is, people ask, why would I put my money in a mobile phone? I'm happy to keep it in the bank, or happy to keep it under my mattress. So there's a trust factor that they need to overcome. And that freemium concept gives them the opportunity to do that. And there's been lots of research done about the trust-building capacity for most consumers. And I think they say it's generally 3 times. So they try 3 times to use the service. And if anywhere in that transaction that there's a failure, they sort of pull back, and it's hard for them to come back and build that trust. But if you go through that 3 times attempt to use the service and you get comfortable with it, generally people then move on. Okay, I'm happy to pay a price on that if that's the model most operators choose to go down.
Okay, talking to Nnamdi Oranye, Business Development Manager, talking mobile banking. Are you using this mobile banking? Have concerns or questions about it? Let's talk to the expert. He's on the line talking to us. 0861987 that is the number to call in the studio. 0861987 That SMS line is 44622. It will cost you R1.50. Now, Nnamdi, these options that you've just tabled, how do operators, have you presented them to some of the mobile operators and the banking institutions?
Yes, we've started presenting that. It's a relatively new concept in the mobile money world, and there are quite a number of operators who are open to that. And the reason for that is because most operators have invested heavily in technology and haven't necessarily gotten the returns they're looking for. So they've got this massive platform with probably 5% active consumer base on it, and they're looking for strategies to help them drive that usage and adoption. And the freemium concept is a clear way to drive that adoption. Whilst it sounds relatively simple and straightforward, it's not that easy to implement, because you have probably 3 or 4 parties who need to be involved, and you've got to make sure from a consumer perspective that there is significant value to the consumer. So whilst the consumer is using the transactions for free, there might come a time where they're happy to pay for it, and in paying for it, they need to know that what they're paying for gives them value. So in that instance, there are 3 or 4 parties involved that need to manage it, and that's probably part of the reason why it hasn't been implemented to date. But it's definitely a model that most operators are starting to look at. In fact, I know of one in South Africa where we're looking to do a case study on, which has implemented a variation of the freemium model, and that would be a fantastic case studies for other operators who want to go down that path to consider.
How does it, just something I'm thinking about as we're talking here, how does it affect the people who are on prepaid contracts and from time to time they change their numbers?
It doesn't affect them, because when you think about it as a bank account, and you're accessing your bank account using your mobile phone, which is your number. So what the mobile number does, it gives you the additional security level to access your bank account. So generally, what you're going to do if you change your numbers, and it's very rare that you have people changing their numbers in droves. What you do is just pretty much reallocate your number to your mobile money account, to mobile wallet.
Okay. How do you see this the boosting the world of commerce in Africa, on the continent, if a lot of people in that lower LSM start taking up this mobile banking as an option?
Yeah. Without a doubt, mobile banking, mobile money, mobile financial services is a game changer in sub-Saharan Africa. It's without a doubt. The question is, how effective would the operators be in making sure the consumers come into the fold quickly? There's lots of activity in sub-Saharan Africa with mobile money. You think of the big markets. Kenya clearly is the leader in it. Nigeria has a financial inclusion mandate by the government to actually bring people into the fold. So it's not an option. It's a financial mandate by the government to do this, to implement it. You think Zimbabwe, with the players there, especially with lots of people in the diaspora outside of Zimbabwe wanting to send money back home to Zimbabwe, or even vice versa coming out. So this is without a doubt a game changer. And I foresee in the next probably 3 to 5 years the maturity level of the mobile bank and mobile commerce space improving significantly. So, mobile commerce, mobile banking in Africa is really only about 5 to 6 years old. The first 3 years of that was probably spent with learnings in country, some not successful, some quite successful. And now we're sort of in that growth phase where most countries are starting to adopt it and come up with quite innovative ideas. So in the next 5 years, it'll become a really mature industry. And then, you would have achieved the financial inclusion mandate for most countries.
Your company also does work in the Middle East. How is the mobile banking doing there in that area?
It's quite similar to Africa, however, a bit more mature. In terms of mobile commerce, we've actually seen more activity in Africa as opposed to the Middle East. But that being said, it might be a function of distance. But most of the mobile commerce and mobile financial service players are wanting to play in Africa, but it's still as aggressive in the Middle East, where banking infrastructure might not have been as prevalent as in the developed world. But no, my research in terms of interactions with operators, I'm finding that's more focused in sub-Saharan Africa.
Beautiful. Nnamdi, I enjoyed talking to you. It's been such a pleasure. And
thank you so much, Lawrence. I appreciate having me on the show.
All the best. Nnamdi Oranye, Business Development Manager there. They are seeing opportunities for this 13 million unbanked people, an opportunity for mobile operators to introduce this mobile money transfer to this market and get them to play an active role in the economy throughout Africa. Kenya, success story there. And he's seeing a future. Mobile money, the way to go. Convenient.